Hello. My name's Ethan. Make sure to check out my website, ethanwrenn.com. From there, you can find links to all my various socials. We are currently live on Twitch, YouTube, and the front page of my website, so make sure to follow or subscribe if you'd like to get notified when we go live next. The next symbol we're going to be looking at is actually a currency pair. What currency is it? The Australian dollar. So, what is it we like about the Australian dollar? As you can see, over the past few months, it has started to show signs of strength. It is currently up as much as 5% from its recent bounce off that $63 price point. Now, what is it we like about AUDUSD? Well, when analyzing a currency pair, you need to look at more than just the currency that you're looking to trade. You need to look at the currency that you are trading against. So let's quickly pull up the US dollar. If you've been subbed to this channel for a while now, you will know that we have been trading the US dollar for a very long time. We've traded throughout this drought of the US dollar. We traded long in the US dollar here. We traded short here. We traded long here. And there's videos on the YouTube channel to back all of that. But right now, we are currently in the process of being rejected by this trend resistance and watching the US dollar depreciate as it comes down to its trend support. From its current price point, the US dollar is projected to depreciate as much as 10%, which again, in a currency is absolutely massive. If we were just talking about a company, okay, 10% may not seem that big, but when you're talking about something like the US dollar, it's kind of a big deal. Now, when you see a depreciation in the US dollar, you tend to see strength across a wide range of assets. This can include US stocks. This can include real estate in the US. This can include foreign currencies. So that is what's prompting us to start looking at a lot of these more foreign currencies that you could potentially be moving money into and making money long term. Now, if we go right back to AUD, from the current price point, if we're expecting the US dollar to depreciate as much as 10%, that would push the Australian dollar up to a price point of roughly 73 cents from its current 66. Kind of a big deal, especially if you can leverage into some Australian investments that are also appreciating while their denominated currency is appreciating. That might be the smartest way to utilize information like this. Now, why is it we're currently projecting higher than this 73% price point? Well, if we go right back to the US dollar, and we noted from its current price point, that's as much as a 10% drop. Now let's look at a slightly bigger time frame. If we zoom this chart out a little bit, it really starts to paint a bigger picture. Again, we have our uptrending price channel, but if you really zoom out the chart, you're going to start to see that this is a tiny little upward trending price channel that's part of an even bigger downward trending price channel that represents easily 50 years of price history on the US dollar. As you can see, this chart goes back as far as 1968. And since then, the US dollar has been in this downward trending price channel with a peak up here, a peak up here, and these lines that run right through it, right? So this larger trend that is in play here could potentially result in the US dollar depreciating more than 10%. And if that happens, that means foreign currencies, as well as U.S. equities, U.S. land, seek to gain from that depreciation in the U.S. dollar. Again, 10% down from current would put the DXY at roughly 91 U.S. dollars, but it could depreciate from its current price point as much as 36.69%, which would put the DXY at $64. Now, what else shows us that the US dollar could be peaking out here? Well, with every symbol we look at here, right? We have our RSI at the bottom. When the RSI is low and touching the ground, that's typically a sign that it's oversold or potentially a good value. When the RSI is high in the sky, like it is now, that's typically a sign that it's overbought or potentially overvalued. Now, always keep in mind the time frames we're looking at. We have this M here, which means every candle represents 1 month of time. That's a big time frame. All tinier time frames are subservient to the bigger time frames. So here we are on the monthly, and let's look at the RSI. It is in the process of getting rejected off that 70, that high end, that typically a sign that it is overvalued. It's currently in the process of getting rejected and running down. When's the last time this happened? Well, you could see right here in 2015, and we saw that depreciation from the $99 price point down to the $88 price point. Let's look at a time before that. If we come back here to February 2001, look at that. US dollar was here and proceeded to depreciate as much as 40% in a nation's currency, right? 40%. And the RSI would have represented that and told you about that much prior. And then way back then, we have 1985. The RSI was peaking out on the US dollar and proceeded to depreciate as much as, oh my goodness, do we even want to know? 46%. So all of that would lead us to potentially believe that if the US dollar is going to see this depreciation, a lot of these foreign currencies, whether it be JPY, whether it be the Australian dollar, the New Zealand dollar, are going to seek to benefit from this weakness in the US dollar. And if this happens, you could see a run in the Australian dollar as much as 33%, which would put the price point of the Australian dollar up to 89 cents from its current 66. And again, the Australian dollar has been at these price levels before in the past. As you can see here, as you can see here, as you can see here, it has been at these price points before. So this is not some unfathomable idea that we have here. But I just wanted to point all of that out. And again, from its current price point, you've seen bounces in the Australian dollar before in 2009, for example, off this same price point. It was the same price point as it is right now. What happened? The Australian dollar proceeded to run as much as 67%. Guys, that is a nation's currency. This isn't a penny stock. This isn't an index. This isn't a blue chip. Like, this is a currency, right? Running as much as 65, 70%. It's crazy when you think about it. And the best way to utilize information like this would be like, okay, we're expecting an increase in the Australian dollar. Maybe I can invest in some Australian assets that are denominated in the US dollar, that are denominated in the Australian dollar. So what you would do is you would take your US dollars, convert them to Australian dollars, invest those into Australian assets, and then a year, 2 years down the line, that investment that you made appreciated. You go to sell that investment. You now have your Australian dollars, and then you're converting those Australian dollars back into US dollars. So you're gaining both on the Australian investment and the exchange rate differential from when you entered and exited the country. That's the best way to utilize information like this. So with that being said, I think we are going to be moving into our next symbol.